All right, ahead of the fall 2024 real estate market, we are going to find out, is this going to be a normal fall where we see a pickup in sales and a pickup in average price? Or are we going to see the same sort of steady movement we've seen all summer long on this episode of Real Estate Chat with Robert Eid? And
Jonder Perez.
I give you some market insight using Robert's charts here. But Robert, what's interesting as we start out here, make sure you like and subscribe so that you don't miss any of these fantastic charts that Robert makes, is you want to make a case about the CPI and how it's sort of affecting, I guess, the current market conditions as far as real estate is concerned. Why don't we start there?
Okay. The CPI is a measure of month over month and year over year. And that's the number that we hear 272931, whatever it is, annualized data based on the change from one month to the other or from a year ago to now. What we always forget is to add in what happened last year and the year before and the year before and the year before, which is what this chart does. Starting in 2020 and going up to the current month, there's a change of 18 point something or other percent, 18.15%. So every time we hear about 3% inflation or 2.9%, it's got built in 15, 17, 19% on top of that that's happened before. Now, this is just CPI. This is the whole economy. Never mind what happened in Toronto. Never mind what happened in the big centers across Canada. So remember that we're solving a problem that took a long time to create. And whatever created this huge whoosh up in all the prices is not being blamed for pushing all the prices up, but now we're looking to somewhere else to solve this huge whoosh up with fuel and with cost of land, and cost of labor, and all these things, um, all on the backs of affordability. So um, the person who caused this thing to go up has got to unwind it.
Well, and next week, if you're watching this on the last week of August, it's back to school and back to announcements of dropping the interest rate. So if we anticipate that there will be another drop next week, September 4, Wednesday, then Robert, what does that mean for affordability? I mean, everybody says it's, you know what, these drops are happening too late. They should have been more aggressive with it. Others are saying that, interest rates should just be continue to be level, and what we'll see is roaring prices again. But what's your insight in terms of where things are going to go once the rates do drop again next week?
Mr. McLister in the Financial Post said it the best. He said, everybody's waiting for the 5 year to start with a three, get under four. And that will mean that, I'm sorry, the 3 year to get under four. And when that does, then people will say, okay, that's as good as it's going to get. And they won't take the three, they won't take the five, they'll take the variable because they know that very soon it's going to come down to that level. And so they can get the benefit of it coming down and then continue coming down because they see that that's the trend. So what's happened, we talked about our five groups: the last time seller, the first time buyer, the trade up buyer seller who's got something to sell in order to buy something else, and the investor that's underwater, and the investor that's in the money. And the problem why we've been existing for so long with sales at 30, 35% below normal for 3 years is that the first time buyer's not there. Now, he'll buy a super bargain somewhere, but he's not out there looking every day, going to the open house. He's not doing that. He's just saying, I'm waiting for rates to come down to make it more monthly payment affordable and prices to come down. I think unless I'm forced to, I will not pay those prices. And so now we're going to see the balance change. I believe that July was the bottom. August is always lousier than July. So now when we come into September, that we're going to have a fall rally. And the fall rally may not start off right off the bat, but maybe it started already. I've been charting every day what the sales per day are. And we started out the month at 178, and that's too small of a sample. 214 sales per day. In the last few days, the 28th was 229, the 29th was 236. This is average of year to date. and on the 30th at 229. So we've now finally got up over 5,000 units per month for the month of August, which is still 35% below normal and 10% below last year. But it's the end of the beginning. That's
Well,
what.
we're going to see. Let's look in the rearview mirror first and see where sales are going to be ending up based on your, I guess, your projected, in terms of what August will look like based on what has happened over the past couple of days. Robert, 25th best August. Is this good, bad, or just normal, or just whatever it is? And
Well, jump down to the next box. August 24 is 35.8% off a hot market. The last time that was in 2019 when we had 7,700 sales. And 33 to 35% off the 5-year, 10-year, 16-year, and 20-year averages, which are in red in the big box above. So we see it wompling along the bottom. It's people are not buying. They're not buying. And so the amazing thing is not the fact that they're not buying, is that prices aren't fading. So where we are is where we've been the whole time, bumping along there. 23rd best, 22nd best, 24th best, 25th best. Month's not over. Um, you know, lousy, 30% off normal. But September should be different.
Oh, let's hope so. Let's hope it continues on like that. And part of the story is the inventory, Robert. And so we are noticing that inventory is dipping a bit in our past episode. If you did watch it, typically inventory, well, listings are supposed to be introduced more into the fall, which causes a rise in inventory. But based on where we're at, how much more listings could there be? But you've noticed a little bit of a drop in terms of inventory. Is that because it can be attributed to sales, or is it because sellers are just taking their listings off the market because it's not selling?
Number two, it's exhibition time. It's everybody is not stupid. They can read the same newspapers that I can read. They can read the same indications at the grocery store and in the political commentary as I do. And they just say, okay, it's not a good time. Why do I want to? We said this before. Why do I want to get up at 7 o'clock in the morning and make the house beautiful and then nobody even come for an appointment? So I'm not going to. So I'm going to take it off the market until things seem better. Until I see 4 or 5 of those cheapies that are lousy in the neighborhood sell off and we can get back to normal again. So yes, there are a few that have been rented. There's a few that have been sold, but we're still way high. What does it say? 43% variation from the 16-year average. So there's still a lot of homes. Now, this is the other interesting thing, that this is the Toronto, including 905 and 416, in the last month or so. Normally it's a 60-40 ratio between the sales that achieve in 416 versus 905. It's 70-30 now. And there's also a 60-40 normal ratio between condo and freehold, considering the two markets together. And this time it's 70-30. 30% condo, 70% freehold, 30% in 416, 70% in 905. So it's not even. It's spread out. When we look at the official numbers, we'll get a breakout of what happened in 905, which again is 5 districts, but we only deal with it as one versus the 416.
Stay tuned for that next week. And what's your price projection here for August? And how does it compare to the year and where we might end off 2024?
Okay, last month I varied from the long-term average, and so I stuck my neck out and said that prices were only going to go a tad down in July from June when they went down 4%, which was a little bit worse than the average, because I didn't feel that the prices had gone down, but it doesn't matter. So this time we stick with the trend, and we looked at initially what's happened the previous 23 years. And the average was minus 126. 5 up years, 18 down years. So I'm taking the same 176, 1.76% minus from the previous month as our price for August, which is 1,087,141, and plug that into our what's going forward to the end of the year chart. And that chart only matters if prices continue to drop by the same even 1% a month, but we don't know if that's going to be the case. The more important thing is the next chart where we take that calculation projection of 1087 and we plug it in and we see that if it goes down by 1.76%, which is what the average of all the down years in the last 18 of the last 23, we're going to end up with a record August. Now, I hesitate to say that again because I said that about July and it was wrong, but I've taken myself out of this completely so that this is what the trend from the last 18 or 23 years says. That if it goes down less than 2%, we're going to have a record high August. Now, the next 1, 2, 3, 4 years are all, between a million and a million 87. So they're all bunched in there together. We got them. You can see them packed in here. The starry blue is off from what it was. It's off 0.43 from a year ago. It's flat with the maximum August because it's the maximum. We're 18.5% off the peak in February. We can see the peak over there. And we're off the previous month, previous month, best month in the last 12 by nearly 7%. And that was just a couple of months ago, the best part of the year in May. And then change from month previous, we said, is 176. So we can see that they're following lockstep the trend of the red, which was last year. And we have a chance to do that again in September. And we can do better, we can do worse. But I think that following the trend in September is going to be the worst we will see.
The worst we will see. So August is going to become the best August ever. But what do you mean by the worst that we will see for September?
In September, if we follow the trend and we move up slightly in September over August in price, sales will go up too. Then we will see the price increase in September that will make it, if we stick with the average, no worse than it was a year ago.
And so that's stable. We're looking at we're seeing stable despite of the situations.
The key being sales will be up, interest rates will be down, and prices will be not down. So someone who wants to move before the snow flies, or someone's got a place to sell, sees that their price range can sell, looks around in the slightly higher price range for something that he likes, and says, okay, I can make a transition. He can put in an offer subject to the sale of his current property. He'll get that accepted. And you're going to have a normal September. It's going to be, thank goodness the summer's over.
So nothing exciting, nothing really exciting, except the fact that it will become. We tried in July, but now it's going to become the best. We'll get this right this time, okay, Robert? Best.
Well, we took my own thinking out of it. Never mind what I sense. What does it say on the paper?
Okay, so best average price on
for August forever.
For August ever. And September, if it tracks, then not good, not bad. Just
No, it looks like it'll if it tracks, it'll go up. It'll go
perfect.
Up, and that's all you need to hear. That's all Mr. Sit on the side needs to be. The prices are up, and rates are down. So why are you sitting on the sideline?
There you go. So if you're looking to buy into the fall market, get off the fence and go look at homes. Be responsible, obviously, and make sure you get the right advice. If you have any questions, type into the chat.
Get a commitment from a lender.
From a lender. Make sure you know what you can afford and what your budget is, but it couldn't possibly be worse from here, right, Robert? I mean, what else could happen?
Okay, that's what I'm saying. The worst is over. That there was a lot of dire predictions a few months ago, and they were wrong. And we all wondered if we were going to see a, gradually fade out over 7 years. But nobody wants to see that. They want to see the economy recover. They're dropping interest rates to make the economy recover. They're changing all kinds of things. I'm delighted to see the new planning statement out from Ontario that's revoking places to grow planning rules. Everybody wants to see things happen because the engine of a consumer-driven economy is housing. So you got to get housing going.
There you go. Keep buying houses. Okay, no,
Yeah.
you know we meant that
For
too.
the builders and for the construction and for the land development, there's a lot of businesses that are related.
Do the right thing for you. Do the right thing for you. If you need a consultation, if you need advice, feel free to reach out, type into the comments if you have any questions. Thanks for watching this episode of Real Estate Chat. Make sure you stay tuned because the next announcement is basically the interest rate announcement. And of course, we'll have the Toronto Regional Real Estate Board update for you, and we'll see how close we got to Robert's projection of best August ever. Thanks for watching. Like and subscribe. We'll see you in the next episode of Real Estate
Very
Chat.
good. Okay. See you later.